It was reported recently that 4 US financial institutions hold toxic debts worth $220 trillion. World GDP is worth, anyone? 6. Well, according to a more recent estimate, maybe 70 or 79, depends on how you count it, in trillion. And World Ecosystem Services, which is a fancy way of saying how we value nature, is worth 70 billion. There's a kind of some sense that we've got things a little out of kilter, perhaps. Andrew, you described, and I was feverishly wishing that we will have the speech soon that we will share, that I was taking notes all the way through. It's one of those speeches where there was a kind of gem every other sentence. And thank you for your crafting of it and the work that clearly went into it, quite apart from the kind of the scope and the passion that animated it. You said that all the regulations would add up to something very big, but I forget the quantum, 2 metres. You contrasted the single page of the medical profession, but of course you would be the first to say, and you went on to say, that that single page isn't really words, it's a statement of belief and intent and moral purpose and service. So, now that they are assembled, I am delighted to welcome the first speaker, who will be an expert, and I just invite your comments really as you look through his CV. Damien from Towsville advises leading companies on all aspects of executive compensation, including performance pay, and also senior executive competitive positioning, reward strategy, executive share option, long-term incentive plans, incentives in the field of fund management, private equity, financial services, and capital market. I could go on, but hopefully that should give you a sense that here is somebody who not only has real expertise, but I know from the discussions that we are lucky enough to have with Damien, also has a sense of how it might otherwise be. Damien.
Thank you. Thank you very much. Share your predictions, apologies for that. I think the first thing to say is we've all come across these jokes about a guy discovering a fairy or a gnome or something and being granted 3 wishes, and then you have your 3 wishes, and inevitably at the 3rd wish something disastrous and unexpected happens. And incentives are a little bit like that. Be very careful what you wish for. They're a very powerful force. There's 2 things that go on when you install an incentive scheme. There's not only the unleashing of greed, but there's also the granting of consent. You're granting the authority of the organisation to the individual that that is what you want, and that is typically what you will get. Now, the incentive itself is a little bit like fire. Is fire a good thing, or is fire a bad thing? Well, without fire, I think we'd still all be living in pretty cold caves. So one could argue fire is a very good thing. It's a force for good over many, many thousands of years. But fire can be disastrous. It kills people if it's in the wrong place and in the wrong way. So you can't divorce the discussion of incentive arrangements from governance controls and proper fireplaces around the fires that you are setting yourself. And I think where incentives go wrong, it's the fault of the governance system rather than the incentive itself. One of those governance controls is culture. We should all know how to behave. And you know in your heart of hearts as a good person what is good behaviour by contrast to bad. And the culture and governance system should moderate and control the incentive set. And all too often I think that's been lacking. As an example of how powerful incentives can be, and reaching back in history, how about a nice monopoly? Queen Elizabeth I established the Royal East India Company and granted a monopoly to exploit the wealth of the emerging East. What a fantastic opportunity, a monopoly of that nature. Just a license to print money you would have thought. But only 3 years later, below me down, there was established the Dutch East India Company. The direct competition for exactly the same franchise. Now, there was an interesting, to me, but little known fact about how the pay arrangements for the captains of these two companies worked. The UK, or the English captains, were paid as a direct profit share. Their profits of the venture of their ship and of their teams of ships were shared directly. The Dutch East India Company paid their captains as a return on capital. It charged capital against the profit and shared only a percent of the excess. Within about 50 years, the English Royal East India Company was over 20 times the size of the Dutch East India Company because the incentive to grow was uninhibited by capital requirements. It goes back to this thing about incentives work, and be careful what we wish for. It's not always the fault of the incentive system if it goes wrong. It's much more to do with culture and the governance system. Things like that. Thank you.
Paul Feeney. Paul is CEO of Old Mutual Wealth, which lots of the Scandia Group and others launched in September 2012. And the title Old Mutual Wealth PLC conjures up all sorts of concepts and themes. Paul's had a distinguished and very successful career, as you'll see, in many parts of asset wealth management, etc. And we look forward to hearing from you, Paul.
Well, I was listening to what Andrew and said, and a couple of things come to mind. First of all, Stephen Lansman's on this famous quote, which is, "People respond to incentives, all the rest is commentary." And to a certain extent, I think he's right. It depends what you link those incentives to. And coming back to Andrew's speech, and talking about the medical profession and the financial services profession, I guess the thought that came to mind for me was physician heal thyself. And we have, as Andrew pointed out, this myriad and complex web of regulations and rules and can and can't do's. Clearly because the financial service industry and the regulator does not trust the financial services industry to do the right thing. So we can wait for another set of rules, and maybe more simplified rules, and maybe easier to follow rules, or we can start doing the right thing. So for me, I think that comes down to your business model and how you run your business. So now I run an investment and insurance business which operates in the UK, across the international markets. Hands up how many people are waiting for another insurance policy to arrive. Another mutual fund? Another stock? Another bond? Nobody needs any more of these. We have thousands of them already available. So then you say to yourself, well, if that is the case, why are we here? Why does my company have a right to exist? Is it just to make money? Or does it have a higher purpose? Is it a more noble purpose? Because one of the ways that I find you can motivate, if not incent, motivate people want to do a good job. They want to know that they're adding value. They want to know that their contribution is valued. And you can pay people, and often if you pay people, it doesn't really, to a certain extent, change a lot of what they do the next day. It may focus them a little bit on activities. So then I say to myself, so what is our, when you're looking at your own business, and those of us who are responsible and fortunate enough to be in a position of stewardship in the financial services industry, how do we organise our business? So this is not a pitch for our business, but I operate in an industry where even now I see my fellow competitors selling products with 8% from 10 commissions. Well, who's paying for those 8% from 10 commissions? It's not the financial institutions, it's the customer. Now they justify it by saying, well, these are long-term investment policies. Of course they are. They have to be long-term because you can't possibly make any money out of them in the short term, or in fact the medium term. So they're just plainly wrong. So one of the things to do is, I think, look at our own businesses. For those of us who are running financial services business and say, what is our purpose? So for us, it's to enable positive futures. That is our why. That is our reason why we exist. And then I think you have to start from there and say, well, that's the reason to exist. So you have a purpose, you have a noble purpose. How are you going about it? So look at the product suite. Does your product suite enable positive futures, or is it really just my positive future? Or my executive team's positive future, or my sales force's positive future? Or does it enable a positive future for the people that we're here to serve? So would you then close what, quite frankly, are your most profitable products? Because the ones which often have these sort of fee structures are usually pretty profitable, believe it or not. So would you close them? The answer is yes, you have to close them. If you then look at how you go about investing. So there's a lot of talk in the industry about how do you encourage responsible investing. And I don't mean, because the usual way to do that is set up an ethical fund over here, so we can sell it, if it raise any money, we can sell it, but we'll do it. Or another way is to say, no, we're going to put that into order. How we look at investments, how we judge management, how we judge what they're investing in. Now, no one can put their hand up and say you're going to get it right all the time, but will you try and do that? Will you look at things about, if you're enabling positive futures, think about how you operate in your communities, what you do there. Will you look at the type of, not only the pricing of your products, but the type of products you provide? So I've been in the industry, just over a quarter of a century now, and in the asset management and the wealth management industry. And I've seen all sorts of products, on all sorts of fads, and all sorts of fashions, and I have to admit, I've lost a few myself. And I've kind of got to that stage in my life, in my career, where I'd like to try and do something. I'm not fixed for this, but I'd like to try and make sure that what I'm doing is in some way adding value to people. So, what do people really need? Well, I've come to think that people from financial services, from my side of the industry, which if you like, I'm on the asset side of the industry in terms of the investing side as opposed to the lending side of the industry. But then I think people need one of two things. They need to be able to ensure that the money they've got keeps pace or has maintained its real purchasing value, so it keeps pace ahead of inflation. So you're actually growing people's wealth. And secondly, they need income to live on. And everything else kind of breaks down from those two things. So would you create solutions which protect that, and which aim to deliver that, and are, if you like, most likely to deliver that? So that kind of means you need solutions which are not off to the races, all the time. Really are just, people say to me, how do I get rich? And I say, slowly. And if you can provide those, because that's not been, if we'd have stuck to that sort of knitting, whether it's the investment banks, commercial banks, the investment houses, we wouldn't be in this situation. It has been the green side which is good. And yet most people that I've seen who have actually got wealthy other than pure luck or short-term event have done it over a many period of years by being prudent. So I guess what I'm saying here is, would you build your business out that way? Would you remunerate your executive team that way? And if you would do that, you wouldn't remunerate them on short-term financial incentives. You remunerate them a different way. And you try and link your business around it. So one of the things we do is, across the whole of our organisation, so my organisation, 3,500 people, twice a year, we do a thing called the Barrett Survey, surveys. It sounds a little banal, can't it? It links to these core values. And we ask our people, how do you think our product, what do you think our products are like? Do you think our products are adding value? Tell us the ones you don't think are adding value. Tell us where you feel we're not doing it. So, we're in a situation now, and it's quite a liberating situation, and it's also quite, nervous situation. We've just closed a whole bunch of products. It's nothing to do with RER, nothing to do with commissions or anything like that. All industries doing that. So I guess I'm sorry, rambling on there, but I guess the key thing for me is your business model at the heart of it. Unless you're prepared to put some of this stuff at the heart of what you're doing in your business model and remunerate people around it and ask people about it, people will tell you the truth, then we'll just be back to the fixed sort of regulations. So that's my.
Thank you so much, Paul. One of the gardening features about Gresham is it feels like you've entered into a kind of parallel universe where there are people from financial institutions to a higher purpose and prepared to structure their business model and products they offer according to those principles. Dare one believe it? Andrew said earlier, what are these kind of question and answers like? Do people actually say anything? Usually they're quite lively when we do them. So I hope you prove me right, and let's have the first few questions, please. Please say who you are, please don't make a speech, please keep your point short so that we can speak.
I'd like to link to Paul's speech, essentially, because it lies very much in what I see are the two formulas in the price that we have at the moment. The first one is a generic formula that is linked, as Paul said, to the lack of value. People are absolutely confused. You think about you guys that come to the banking sector. So 50 years ago, they knew what the values were. They were mainly the Christian values. They still go to church and so on. Today, they don't. They think this is the only game in town. And therefore, since they are not taught any ethical values, ethics with the capital E, they simply think ethic is what works for me. So that's the generic formula. The more specific banking formula is the fear, but look from a different perspective. It's the fear of the young people that come into the banking sector. They think this is the only time I can be rich and get rich quickly. Because when I'm 40, I may be made redundant, and that's it. And that promotes even more. So the fear and greed are entangled, essentially. I think that may be one of the reasons why greed entangled was concerned.
Let's get panel contributions, floor contributions, and then panel can come back as a whole. Some other hands, they seem to have jumped out. Let's go there and go for it.
This question for Andrew, really. Despite everything that's gone wrong, you seem to be defending the FSA, who failed comprehensively the 4 strategic objectives that they were set up. So really, what do you think? Should they continue to exist in their current form, or should we look at something different? Particularly simply recycling the same employees into new situations when they could be found. So the public's perception is that no one's paid for things because these same guys are back in a different form of terrorism.
Okay, one from here. Say who you are.
Peter Caffrey. Paul touched on this. I mean, the culture of fear and greed is based on one single thing, and that's short-termism. And I mean, what we have now is a trading culture rather than an investment in long-term growth. And unless we can get towards the long-term investment in growth culture, then we're bound to fail. Bankers based on bonuses. A new CEO, what we can do, the first thing to do is cut costs, relocate factories, or financially engineer anything other than taking a very long-term view on investment in growth. We have major British companies which are surrendered by the arbitrageurs who are paying vast bonuses. We have a complete disconnect between long-term pension liabilities and quarterly performance on which the assets are generally managed. Until we can put that agenda, and I would suggest, well, I mean, the K review was, to me, a complete disaster. It had no specific recommendations at all. In my own submission, I gave 10, but I mean, you know, if you took everybody's submissions together, you could have 150, and you could at least pick half a dozen of them, but nothing came out of it. We really do have to get over to a long-term culture, and one of the ways we might do this is by paying people a salary, a pension contribution, and a bonus that is linked solely to 5-year or even more long-term growth in the share price, and nothing in between. £1 million for Stephen Hester there and £500,000 there. It's rubbish. He can get us out of until he achieves it, he deserves nothing.
Thank you. Well, that gets us going. Andrew, you've been pretty patient for a while, so why don't you start?
Yeah, sure. I mean, in terms of the ethical question, which I think is also somehow the long-term perspective, I think I agree with you entirely that we need to re-engineer our industry generally and our financial services specifically to allow people to look for the long term. But I do think, coming back to the problem with the financial services industry today, that everything is short term and bonuses in parts of our industry are quarterly, let alone annually. And you're not going to get people sitting down with a client looking at the next 20 years of their lives, or 30 years, or the next generation, if they've been paid every 3 months and what they've sold the last person came to the door. So I think we need to get that accepted, and I think, from the point of the FSA, I think the FSA needs to recognise it and actually start to legislate, which is what happened in medicine, which is what happened in other industries where they said there was a problem. I take Paul's point entirely, and there are some firms who are taking a leap, and it is a brave, competitive leap, because other short-termists will come along and take advantage of them. In our business, we don't have financial targets. We only have salaries, and the maximum bonus somebody can receive is 6% of their total salary across the board, which is a profit share in the company. And it generates behaviours which we believe are in line with client needs. The only thing I would take exception to on the 3 questions is the fact that we need to shoot the FSA. I mean, it is like shooting people who manufacture ladders for an increase in burglary. The FSA did not create libel rigging. They didn't go out and flog all these profit bonds or split capital. Okay, they're not very good at stopping people doing it, but actually I think that you can have legislation which was 20 foot tall, and you will not be able to stop people doing the wrong things, because there will always be more people out there trying to climb up ladders and get into people's houses than there are people who are watching them either climbing the ladders or selling the ladders. So I really don't think you can blame the FSA. They're culpable to a point, but I think the industry needs to take responsibility.
Let's let the other panel members respond, and thank you for explaining the metaphor that I was kind of struggling with before we get others in. Paul, Dagan, do you want to?
Well, yes, listen, thank you for your note. On a couple of other comments as mentioned, I agree that people should be paid, or predominantly paid, on a salary, and then a bonus for us. It's in shares, linked to, in our case, 4-year performance, so 4 or 5-year performance, which also has a big clawback on. So if even after the 4 years, if certain things happen for another 3 years after that, and we're talking about happening, we're not talking about activity, then we can claw it back. So we've recently put that in place. I think on the point of the FSA, I think I'm sort of going back to the invisible hand, Adam Smith's invisible hand, which has now become an invisible crushing fist. Because I think the FSA is at such a disadvantage compared to regulators, always at a disadvantage compared to one of the biggest financial centres, world money centres on the planet here in London. So I think we all remember back to the days, whether it was true or not, I'm not sure, but certainly the idea that a quiet word from the government about sorting things out. Well, no, it's a quiet word plus an awful lot more. I still think at the end of the day, the one thing that the FSA is doing and has to do more is, well, I believe, has had a situation whereby it has relied heavily on its plethora of rules, regulations, and how many millions of pages, millions of paragraphs of directions. Now, I, for one, could put my hand up and say, if you said to me, I could probably tell you the 7 principles of within the FSA. That's probably it. I don't do my job or go about my work looking at all the rules, regulations. You just try and do the right thing. You try and hope that you're doing the right thing. And you try and hope that you're instilling that in your first of all your executive team and from there down. So I don't know. I mean, I think we will wait to how effective the FSA can be going forward. But I think unless the industry itself takes on board some of the lessons of the last few years, it will be it will continue to be on a hiding tunnel.
One thing to say about the surveys about leadership we run indicate that employees will follow leaders and they pick up on various clues as to what is acceptable behaviour and desired outcomes. And over 70% of the influence of leaders is from leadership behaviour. It's not what you say, it's what you do. And people watch what you do. And therefore, winning the hearts and minds and the ethical stance of the board in the first instance, and then the principal leaders throughout the group should cascade down. Similarly, there's issues to do with incentives. Incentives are a little bit like the rules-based control that we were talking about the FSA. You're never going to be able to write down everything that you could possibly think of and capture absolutely everything in the world. You're just creating the most perfect challenge for an intelligent person to game the system. It's a little bit like the difference between the US accounting and the FASB, which is rules-based, and the International Accounting Standards Board, which is principles-based, which basically means you more or less know what you mean, even if it's not actually there in words. If you do this in principle against what we want, because in truth we know what we mean, then we're going to qualify you anyway in terms of the law. So within an incentive, there's a difference between an incentive, which is where you're trying to write out all the rules and get people to obey those rules, and what I would call a reward structure. In other words, sharing in success, some kind of profit share, group-based, it can be company-based, team-based, or even individual-based if it's correctly designed. But there is a danger that you create conflicts within the group. So the better reward mechanics tend to be collective ones. A group broad-based profit share of that nature is quite good. In fact, going back to culture and its influence on behaviour, many of the very high-earning people in the city, commodity traders, insurance brokers and so on, all used to be unincorporated partnerships. They earned a huge sum of money, and they stuck it in their personal balance sheets, but they knew that they had joint and several liability. And that means I have a very clear interest, if I'm a partner in the firm, not to admit you, who seem to be a little bit risque as far as I'm concerned, whereas you, on the other hand, who've been with the firm 20 years and have exhibited all the cultural traits that I think is safe to give you an interest in the business, and collectively we form that judgment. It's quite hard. It's quite hard for you to join our partnership because we've got to have that level of certainty. But when we do, we have that financial stability. After the Big Bang, the incorporation broke that link. Personal liability went out of the window. Clawback is absolutely no substitute for personal liability.
Discuss. You.
Well, sure, I absolutely agree with everything you said, but I'm just a bit concerned whether there is the leadership capability in the senior management and the leaders in the financial services sector. Presumably they've all succeeded and thrived in the culture of DFB, and probably very good at letting the Rottweilers out, but maybe also good in a culture where it's not about selling at any cost and just getting a bonus. So is there a capability?
John Chapman, I've been writing many years on financial services. I agree. Fear, I'll give you two quick examples of fear. 1990, I read a paper called Innovation, City Attitude and Practices, which sparked off a big debate on short-termism. I asked MD of FTSE 100 company to deliver my speech. I was very taken aback. He drew back his shoulders and said, "I'll do it. I believe you're right, but it's risky." He did it, and he lost his job 8 weeks later. Very few industrialists had the courage to take on the city. So more recently, I've done a lot of, I won't go on, but 3 years ago I decided to write about hedge funds, which is one of today's real problem. And the editor of the Financial Times, which I was writing for, said she was delighted I was prepared to write about hedge funds, because many people shared my views on how awful they are, they're just parasitic and privileged gamblers, but nobody dared express them, you see. And I've honestly been fighting a lone battle against the world of hedge funds and investment banks for some while. But I would say there's two other problems in this system. One, there's a perverse complacency. They don't really mind about short-termism. Investors absolutely love it. They get their big dividends. Secondly, they don't want to tackle hedge funds because, after all, that's our monster. We and the Americans created that. Must be rather good. And you know, we can't really tackle them. They might actually give some benefit to the country. And then thirdly, mutual funds were not actually in the pay report, which I don't actually think too much of, but no serial performance in mutual fund performance. And I've written about 3 articles on this. Vanguard yesterday said there's no serial performance. Why then have we got a 12 billion mutual fund industry which provides no value? You might just put a pin in as far as you know. But anyway, the last thing I think is what the city suffers from is ignorance and laziness. Very few people have even begun to understand that short selling takes up 30% of our market activity. Do they understand the securities lending industry? Do they understand the implications of high frequency trading? You know, nobody, very, very few people really got to grips with that. And unless you do get to grips with that, things like trust and all that are irrelevant.
William Claxton Smith. I was with a rather different audience last night hearing Andy Holdane's speech, but it's not actually that speech I was going to refer to, but to his earlier speech about complexity and regulation, about the dog and the frisbee, where a dog is better at catching a frisbee than a complicated computer program. And we heard references earlier to the complexity of regulation, which has become a potential burden on the industry. And I thought one of the ironies of the libel prosecution of Barclays was it was actually done under principles rather than for having breached rules. But I just wondered what we can do to avoid a response from regulators, which is to have more and more and more regulation, rules as opposed to regulation.
So we have leadership capability, perverse complacency, and flying dogs, and counterproductive regulation.
I'm going to go start with. I think that you're right that there is a problem with leadership in the city, but I think that the problems that the city faces now are so large that they are starting to change. And I say that, that we've seen some relatively high-profile CEOs leave because they had fundamentally wrong culture, and I think that's the right thing. I think that shareholders are increasingly concerned, and probably non-executives are increasingly concerned, rightly, about the culture that is in an organisation as opposed to the profit that the organisation generates. And they will be testing the capability of the existing leaders not to maximise profit, but to minimise risk, and part of the risk is the social risk of actually becoming pilloried as an organisation for doing the wrong thing. So I think it's hard, but it is changing. I think it needs bravery again, and I think that the types of things that I said in this speech, if I'd said them 5 years ago, and I believe them 5 years ago, I think that it would receive a very bad audience in the city generally, because people basically want, as the gentleman said before, to have their cake, eat it, and make sure that other people don't get near it, and that complacency has been in the city for so many years that people simply say we're better than anybody else. That has changed. The crisis has changed it. The consumer lobby has changed it. I think social media has changed it, so now people can find less places to hide. In terms of the regulator, again, the conversations I've had with both Clive Anderson and Martin Wheatley over the last few weeks have been all about culture and all about principles again, not rules. And they are trying hard to explain to companies that really the rules are irrelevant if you have the wrong culture, and we will get you. No matter how many boxes you tick and how many rules you follow, if you you have the wrong culture, we will get you. Now, they have to then tell the other 2,500 people in the organisation that that is the case, so they've got a bit of a job to do. But I certainly get the feeling that both new entities being created today are going to be more culturally oriented towards the cultural organisation, more principle-based rather than rule-based, and that they will work. But we have to accept that these things are wrong first, as an organisation, as an industry, before any of this change.
Taking it, Paul?
Yeah, I think going back to the fears, there is fear of the loss of talent. This is true not just of FS companies, but the companies generally. Within remuneration committees, there is a fear the remuneration committee will fail its shareholders if it doesn't attain correctly configure the top team and the top team to benefit the shareholders. And there is a structural problem in the sense that there's a first mover disadvantage. If you move radically away from the prevailing model, you are putting your own company at risk for the loss of the top talent. And therefore, how do you as an individual company get away from that risk? It's very difficult. There needs to be some form of regulatory response to that in terms of either the level or the structure of pay. In terms of the financial services complacency, but in a way I can sort of understand that. If one takes the Porter's 5 forces predictor of profitability, you've got the industry competition. Well, for many years we've had financial services regulatory and also industry bodies. There is competition, quite fierce competition, but nonetheless there's not kind of fierce international competition over certain markets that you might imagine. You've got customer power, where you have high customer power, the ability to extract economic rents from them is low. Well, the customer power, we were hearing, customers are not well equipped, there's not good transparency. So customer power is low. You've got supplier power. Well, supplier power, generally speaking, that relates to, well, talented individuals and teams, and quite often they do extract quite high rents. So one of the main taxes on the economic profitability of FS is pay. But looking at the other two constraints, substitutes, how many more products do we want, how many different ones we don't? There aren't going to be substitutes, money to be invented. We're not going to go back to shells, I doubt. And new entrants. Well, new entrants need big balance sheets. You need track record. If I'm going to establish a new private equity firm tomorrow, I'm going to charge very reasonable fees, and I want you all to give me £100 million to manage, and I'll give you what I invest, proceeds of that, back 10 years from now. I haven't done it before, but I'll be a lot cheaper than firms out there at the moment. How many are in the queue outside when I come to sign you up? Track record is good, and reputation is very important to the customer. And furthermore, the barriers to entry are made worse by regulation. And the more regulation you have, rather ironically, that makes the problem of new entry competition worse, not better.
Thank you. This is a great audience, so I would encourage that we draw on the knowledge, experience and comments of all of you. Can't make it word this. So we go there, and then at the back. I'm not saying your names in order to sort of culturally and behaviourally encourage you to say your name.
So my name is Rohan. I have a question for Andrew, you and Paul, you. I think there's a certain thing that goes across, which is about culture. And of course, there's the external part, which is having regulation and incentives. I understand the limitations that they can remain constrained. But the question is, when the employees operating out of either fear or greed, which is kind of at two ends of the spectrum, the mind kind of goes out of fear or greed. How do you get the employees and the mind to remain in the center? So some of the questions that you asked, which is this going to work in the long run, can be answered not out of fear or greed, but out of your presence, out of inherent innate wisdom. How does one get to that where the rubber meets the road?
Okay, give them a moment to think about that one. Somebody here must go back.
Eric Tracy from Governance Awareness. I'm wonder whether, in fact, we can achieve a real step change in behaviour without some respectable people going to jail for bad behaviour of their organisation. I.e., and I can think of a number, we can all think of a number, and there are a number of people who should be in jail now, but basically they misbehaved, they didn't, and yet there are loads of people lower down in those organisations who are far more likely to face regulatory censure or jail. And I just think that is so wrong, and it just leaves, if you like, for the Occupy, they look like they're getting away with it. And that change, the purpose of some PLC directors, that would change behaviour. That would be fantastic. And as somebody who's an independent, senior independent director of a company where we discovered fraud in the invoice and pension department, watching behaviour and then watching people, top people there, trying to sort of, well, these people down there, where in fact clearly it was culture and you got rid of it. But the demand in the city, we see big, important, respectable people absolutely demand because they
For match ban for racism. I'll try and get the gender balance better, so why don't we have both of you?
Mine is a direct follow-on, I'm Dick Rita, to that, and that is what is the incentive to change the culture from short-termism to a noble purpose? And you were pointing to possibly going to jail, that refers to maybe liberal arts, but if not, what else would be the incentive?
Philip, it's following on from that. I mean, I take issue that
Mexican waiver.
that employees as a body actually need financial incentives anyway. When I think back to my management training, financial incentives fall way down the list of what motivates people.
Yeah. So we have innate wisdom, we have jail, we have the incentive for the noble purpose, and we don't need incentives anyway. Why don't we do it the other way around this time? And Paul, do you want to get us started?
Sure. I probably won't touch on every one of those. I'll try my best. Culture. How do we get to infuse culture? How do we make our products where the rubber meets the road? I think one quick answer would be, first of all, people who are in a situation where they're running these businesses, or have usually not just landed from outer space. They're usually taking a long time in their own particular careers getting to that level. So they know whether a product's a good value or not good value. Either it's because they're mathematically, but importantly it's because most of the products in this industry have been created for distributors, not for customers. So when you create a product for a customer, one of the problems is then you go, gosh, how do I get this distributed? So, but our industry, particularly the investment industry and the insurance industry, has grown up creating products for distributors, not for customers. So the first thing is create a product for your customers, not your distributors. That's one thing. Secondly, I think one of the question was, do we get a step behaviour without people going to jail? Without top people going to jail. Well, certainly I'm in a position where we get everyone who can go to jail, and the FSA's made it clear to me, I'm very clear that most of us are going to be in the same situation, certainly. And all my executive team are in that situation. I think one of the things there is, if you look at some of the issues in the past in the industry, those who haven't gone to jail have been running non-regulated companies. A lot of the regulated companies have been below holding company level, and it's the regulated company that has been regulated. And strangely enough, the people who've been actually running the show haven't been the CEO of the regulated entity. That's got to stop. I think you've got to look down through, the FSA regulates the regulated entity, and too often it's been the holding company levels not regulated. Okay, so I think that's one feature. That will put fear into people who are really running the businesses, but have this layer of legality between them and the second issue is how do we incentivize change from short-termism to a noble purpose? I think this comes back to the lady's question over there about leadership again. And I think it actually comes down to leadership. And I think, I didn't answer the question beforehand, but do we have in the city the leaders? I mean, we've all grown up in a profile of a leader, which is different to what we need in our centre today. It's been how many of us have heard performance culture? Yeah? And what do we mean by performance culture? It means deliver the quarterly results. Certainly when you're in a quotient, deliver the quarterly results. That's what performance culture has meant. Now, I think, in a way, very few companies fail dramatically as companies have failed, unless there's something inherently wrong in the culture of the business. You can miss a quarter's results. You can miss 2 quarters. Companies don't fail. They may have got a make them off, but they don't fail. They fail because of pure ingrained cultural issues, fraudulent issues, competence, poor leadership, and yet they can have been delivering the quarterly results quite nicely, and that's when the company fails. So I think the culture now has to be more. It sounds like one of the it really has to be a culture of integrity instead of just a performance culture, because that's what the public wants from us. They want to know who they can trust. And I always like the Steve Jobs phrase, which was product first, profits next. You can't figure a way to make money out of the product, but it's the right thing for the customers. Somehow you'll make money if you create the right product. If you create the wrong product, it is possible to sell it, but ultimately you're never going to have that link between short-term and a noble purpose. And finally, the lady mentioned about financial incentives don't motivate. I think you're quite right for the main employee base. Main employees, most people, I think they just want, as I said before, they want to do a good job. They want to know they're doing a good job. They want to know they're recognised and valued. That's what they come to. And they want responsibility. One of the greatest rewards you can give people is responsibility. But we all give our kids bit by bit. We don't hand it out to them straight at once. But I think actually for the people who are running the businesses as well, you do want to make sure you've got your incentives right.
Excellent. We're getting some quite good specific policy nuggets out of this, aren't we? That's unusual for one of these. Oh, it's great. David.
How do we shift from short-term to a noble purpose? Well, I am in fact a believer in what I would call enlightened capitalism, kind of moral-based capitalism that Adam Smith wrote about. And in the end, it's the long-term nature of the business, is the corporate reputation. You have a good corporate reputation, it will mean that you are an attractive place to buy from. You are a trusted provider, and that allows you to have a long-term sustainable profit stream in a way that you would not otherwise be the case. Ripping off your customers is a short-term, short-sighted business policy, unless, of course, they are captive and they can't go anywhere else. Which is why you've got some natural monopolies like water companies, which are regulated in terms of what they can charge. But you've got to wait. I mean, it takes time to build a corporate reputation. You've got to get everybody aligned on the same page as to what is the employment proposition as well. So there's got to be a bit of integrity within the organisation about how they develop talent, how we progress, how we pay fairly, and not try and wage minimise at every turn. We're talking about incentive pay and its role in engagement. You're quite right. An engagement measure on its own is not that great. But that said, it's not just doing employee engagement. There are other things much more powerful that do that. It is doing a signalling message about what is required out of you and your job, what we collectively have thought about and designed and want to see happen. It's this kind of permission giving that when it comes to commission-driven sales in particular, makes people compromise on perhaps their personal integrity. They say, well, if it's left to me, I might not rip off this widow and sell her this inappropriate product. But on the other hand, it can't be all that back. Everybody else around me is doing it, and my boss says it's okay. So maybe there's issues of fairness. If people have an incentive in competing firms and I don't, how fair does that feel? But there's something even deeper than that, which is incentives are also sharing success. It need not just be a mechanical push-me-pull. It's actually a way of accessing the economic growth of the world in a way that allows labour to balance against capital. Otherwise, capital owns the whole of the economic growth in the world, and all the technological development, all the destruction of the environment that we see going on around us belongs to the owners of capital. In a way, to me, that sounds wrong.
Just a couple of points to add, and that is, I think the answer to your question is the values of the organisation. And living the values, firstly saying what they are, and then every time you come across an example where somebody is not living them, or indeed if you're running an organisation and you find you're not living themselves, you leave. And that's quite hard for someone to do, but I have seen it happen once. You start off, which is your point of incentive, saying, why are we here? In our business, a very, very simple mission statement, we try and help people fulfill their financial dreams and help them avoid the nightmares. And you reinforce that every time you speak to every employee in the company, that our job is to make people's lives better and prevent them from having terrible things happen to them. And you forget about incentives and everything else. And then the hardest part is when you, as we have done at our business, or move new people in, you find somebody coming along and saying, I don't need to do that, I want to sell a lot. And you say, I'm sorry, you're not part of this organisation. And the hardest thing is when that person is selling more than anyone else, or more successful than anyone else, or more charismatic than anyone else, and you say, I'm sorry, you're not part of this organisation. And you reinforce those values. Because it's the values which ultimately will lead to an organisation succeeding, being true to its clients, its customers, wherever it may be. The point of the purple, I couldn't agree more. I think that Paul's point is right. The FSA are wise to it now. People now have to be sitting on regulated entities so they can go after you. People now know that they are essentially responsible for regulated entities, and they make it very clear that if you get it wrong, you'll go to jail. I don't think there's a few people in the city at the moment who actually know that yet, and we probably do need some scouts to remind people that they have to do the right thing. But I think underlying all of this is having a culture which you can honestly say to every person in the entire organisation, we do what we say. It's honesty, integrity, which is our core value throughout the entire organisation. Everything we do is honest and has integrity. Doesn't mean we do easy things, doesn't mean that we also sort of are a nice, lovely, warm, cuddly organisation, but we are honest and we have integrity in everything we do. And organisations, many of them have all the same, have to live every single decision that way, particularly the hard ones, because it's dead easy when it's all going on.
Glad you made the point about what can be done by leaders that challenge high earning performers in behaviourally unacceptable ways. That is something that leaders of businesses can do, and how the PwC makes that point very powerfully. It's a recurrent theme. Let's go to the back. The back of the room is only holding up the wall. It's been very patient. And looks like Mike's going to seize the day first. Who are you, sir?
Mike Smith, I'm Head of Business Programmes, Initiatives of Change UK. My point is following on exactly from what Andrew Fisher has just said, and thank you for your excellent speech. We all know how easy it is to pay lip service to values inside organisations. But it seems to me, if cultures are really going to change, boardrooms have got to have their list of half a dozen moral or ethical values that are absolutely instilled into every member of the organisation from top to bottom, so that everybody has it on their fingertips or on their lips. They know exactly what the ethical values that the organisation stands for. You've already mentioned honesty and humility, and I would add service and stewardship, particularly in financial services, because essentially financial services is stewardship of other people's resources. I helped to organise a conference in Switzerland this summer on trust and integrity in the global economy. And we did a brainstorm on all the value words that described trust and integrity. And as we were talking about culture, we said we only want value words that begin with the letter C. And it was extraordinary how many words that were put up on the flip chart. It came to between 20 and 30 words, all value words, like customer care, community, conscience-based decision making, but it was extraordinary. So my simple point is that every boardroom has half a dozen words that it instills throughout the whole organisation.
Thanks. Let's go around the back of the room. So,
Mark?
Yeah.
Is the Nurse Clinical Consulting? Question for Paul. A bit of a direct one, this one. One of your values at Mutual is pushing beyond boundaries. What does that mean? What are the values that actually underpin that? What do your staff understand by that? How do you articulate that? And I put that alongside Procter & Gamble's winning. Because I think Mike is absolutely right. Unless you can relate what you say, corporate speed, corporate values, there are lots of them out there. Efficiency, words like this, they are not universal values. They are not moral values. And if you don't spell that out, then I expect you're going to get the wrong behaviours and the wrong misinterpretation of, by accident sometimes, of what it actually means and what you want people to do. I think this needs to be really clarified.
There's one other hand up at the back, although you may have now retreated.
Matthew Butcher, and I work for a charity called Fair Pensions. So there's been a lot of talk, and I've heard this at lots of different places, about changing culture. And that's something obviously we're really interested in. And our strapline, which kind of explains it a bit better, is the campaign for responsible investment. And one of the things we've been really talking about a lot is something that actually came out of the K report and we were quite pleased with is the idea of clarifying the fiduciary duty. And what Professor Kay said was that the intermediaries in the investment chain all should have a fiduciary duty, basically. But what he didn't yet say is what the clarification of that fiduciary duty would be. He's actually said it should go to the law commission to be discussed. And what we really think is that there should be a sense of an enlightened fiduciary duty. And I'd just like to know what you all thought of how much that plays a part in sort of moving away from short-termism towards more more noble investment.
So, enlightened fiduciary duty. And you prompted one other comment from the floor, I think. Yes, sir.
Mike Clark, Ross Investments. I think we agree incentives at the heart of much of this, also that we need to get on with it. Slightly encouraged by Andrew's question about regulator conversations. I mean, whilst we're getting on with it, how can we encourage regulators to recognise some of these things? I was struck, batting slightly for Kay, this idea that Hippocratic Oath is sort of one page of incenting neodocs to do the right thing, 2 metres of rules which I am sort of engaged to avoid and get round. How can we sort of progress the regulatory world to support what we're talking about?
Great questions to pick up on there. David, why don't you go first if you're happy to?
Well, regulation does need to be also in the international context as well. Local financial services is a movable feast depending on the areas of activity that we know are on. Retail is less so, but there are many where this is a problem that needs to be addressed by international regulation. It's not just the UK regulation going first.
Can you speak up?
The point I was making is that when we talk about efficiencies or changes in regulation, the regulatory regime should be moving worldwide. And the real difficulty is that there isn't a worldwide regulator. You've just got regional regulators, and each regional regulator has an interest in trying to preserve the competitive advantage of its own domestic financial services industry. So there's only so much one can do. I happen to be of the view too that the actual regulatory rules are, well, necessary, but far less strong than the cultural things that we've been talking about. The behaviour of leaders and articulating what is required and following it up by action. And it needs to be disciplinary action. I'll give an example in our own firm. There was a partner in the West Coast USA who was consistently warned over a period of, well, getting on 24 months about deficiencies in process and quality assurance. When he was sacked, every partner in the world knew about it in about 12 hours.
Well, that's such a kind of chilling moment that nobody seems to want to speak. But
just to say very saying, ooh, fiduciary duty, that sounds a bit strong. You know, I might actually be responsible for the decisions and actions I take on behalf of clients. It's important. I mean, a company which is looking after a client who has, the client by definition is vulnerable, has to take a fiduciary responsibility for that client. And I think, again, you know, people in this room, people who are opinion leaders, people who write in the press, need to start saying it's not acceptable to dodge these particular bullets and say, if you want to be in business going forward, then live by the values that you're talking about, or your lots of particular values of pushing boundaries. I think in terms of regulations, you know, we are where we are. We've got a bunch of rules which are 1.5 million paragraphs long, and we have to abide by them. Actually, it is a lot easier to abide by them if you've got fundamental values underlying it and you are operating on a principled basis. And we, as a firm a couple of years ago, got fined by the FSA for having a technical breach in an administrative area. We had two ways of going on that. One is to fight it and say, actually, technically, we think you're wrong, or actually, you're right, it was the wrong thing to do, and we will not do that again. And we used that small administrative error, went through every single employee in the company and said, look, this is what happens if you get this thing wrong. Can you imagine what happens if you get something wrong for a client? And we used the power of a rule to help us reinforce the principle. And you need to find any crisis that happens in any company to use that crisis and to reinforce with each of the employees why it's so important to do the right thing. And I think fiduciary responsibility is absolutely fundamental. I think that the regulator is where it is as well in terms of internationally. You can't break away because we are part of a broader area, but they certainly are moving increasingly down the principle space regulation as a cultural attack, and it's got to be the right way.
Okay, well, I'll just mention a couple of things. First of all was, the gentleman mentioned service and stewardship. I think that's absolutely right, stewardship, because in a way, we all wear the jersey for a period of time, you know, and at some point in time, after we are gone, we move, leave, what have you, somebody else will wear the jersey. So it's, what do we want to achieve while we're wearing the jersey? And that's what I tell my team. In terms of values and paying lip service, couldn't agree more. I mean, how many firms have we worked for that didn't have a set of values? Every firm I've worked for has a set of values. And I think that for most of the time, I couldn't tell you what they were most of the time. So, in the firm that I'm running, yes, we have values, pushing beyond boundaries, integrity, trust, teamwork, customer focus, but at the end of the day, what does that mean? Is it something that people remember? So we have a statement which talks about behaviours for those values, and we call it Act Now. Okay? Aim high, take your team with you. Customer first, they're the reason we're here. Teamwork and trust in everything we do. Need to listen and act honourably. Own your own decisions and win together. So those are the behaviours that we try to implement. And we do it in a way which is a bit of a catchy phrase. But then the other thing we do then is we try to measure that, and openly all of us across all of our firm get that feedback. So if you take one, customer first, and the reason we're here, we have another measure for that which is called EVP, easy, value, peace of mind. So do our processes and procedures easy for our customers? Do our customers feel valued, and is it delivering peace of mind? So I think you're right. Unless people spend a long time, companies spend a long time getting this set of values, and it's like job done. You know, but unless you can actually then relate that into a set of behaviours, then it matters very much. Question then was about responsible investing, ESG. What do we do? I think it's one aspect. You know, a lot of people pay lip service to responsible investing, ESG. We do a lot of business down in some of the emerging markets, where it's a, you know, if you don't have an ESG screen in terms of your investment process, you just don't get into business. So, in fact, it's more, in some of these markets which if you like are pushing the envelope more, it's becoming more the only way that you can do business. It's less so in the developed markets. People pay lip service more to developed markets. But I think it is because it's harder, it's more costly, and you know, you've got to be prepared to screen out businesses which probably will deliver a decent shareholder return. But ultimately, you may not feel about the right values or governance. I think in the regulatory world, Andrew said, of course, we are fiduciaries. You know, and there's a big difference between a fiduciary business and a proprietary, a prop trading business. And I think a lot of what the City and Wall Street got wrong was it blurred the lines between a prop business and a fiduciary business. And you know, I think that's ultimately completely wrong. Do I think that the commercial bank should be allowed to be of my call, should be allowed to be investment banking? No, I don't. I think when I'm giving my deposits, putting money in a savings account, I don't expect it to be invested in collateralized mortgage bonds. You know, I never knew it was, and I don't expect it to be. But that's exactly what's happening. So we're fiduciaries, we're directors fiduciaries, and I think that goes back to what I was saying before. So I run a business which had 7 CEOs before we used to have a little joke saying CEOs note to the CEOs of CEOs, which is a bit ridiculous when you think about it. So now all of the underlying regulated companies, as well as the holding company, I'm CEO. So the reason that is accountability, and which personally I think is one of the key messages in the city, be accountable. If you can be accountable, so that's a pretty hot seat to be in, because now it is me. And I think coming back to what Andrew said before about zero tolerance of people who don't, aren't right for your culture, even if they're high financial performance. You know, I'm not in the game of rehabilitation for people who don't do what they need to do, because I'm in a jail. So I can't afford it. I just can't afford that to happen. So it's zero tolerance.
Thank you. So I think we're now at the final round of questions, and then invite the panel to give their closing remarks, and Andrew in particular. Hello, Andrew, who receives senior for us tonight. Just say 2 things. One is, I'm not quite sure how this will land with this particular audience, but nevertheless, to encourage you to tweet on the hashtag tomorrow's value. There are a few tweets out there emanating from this lecture, you'll be pleased to note. And if that's your, if you will add to those, then please do so. Secondly, to pick up the point that Mike Smith made, tomorrow's company is part of the City Values Forum. Comes from the Lord Mayor's initiative on restoring trust in the city. We have a particular lead on doing a piece of work on governing values, how boardrooms can be and achieve if they're line of sight to values. It's actually a very hard piece of work to do, because whilst there's a lot out there about values, there is much less out there about what boards have done to take stock of, to address, to lead, and to turn around values. I'll be chatting with our panelists later about that in the weeks to come, because there's some good examples here. So if you do have examples, good and bad actually, we'd be very grateful to hear from you. Alex, who's in the front here, blue shirt, very much like you to talk to him. So, final responses from the floor. Let's do them very quickly. All right, snuck up there, but the sort of gender imbalance is thereby preserved. Sorry, you can't do that, don't I? So let's go 1, 2, 3, 4, 5. But if you could please keep your points really short, no more speeches.
Very quick one, Richard Sykes, PwC. I agree with a lot of what we talked about this evening in terms of values and the need to embed those behaviours, etc. I still feel though, looking at the slide up in front of us, we've left the subject of greed out there as sort of almost the elephant in the room, which we haven't really tackled. And I still think society at large believes that greed is probably the biggest issue in the financial services sector. So any sort of final comments in terms of how we dispel the perception, possibly reality about greed in the system?
Yep, going back around here.
I'd love you to reflect.
Can you say who you are, please?
Ian Jones from Oxford. Just to reflect on the history of this. When did this go wrong? Because one thinks about the retail bankers being trustworthy and so on, these things on one side. But equally, I remember a letter in the Times once where somebody said they worked for a stockbroker, and if they had a really good deal, the ordinary person got 1, and if you were the Duke rather, you got 5 times, and if you were the Duke's mistress, you got 10 times.
Golden ratios.
Andy Chapman changed the conversation. My question was related, I think, a couple have just come up. Just really asking for your views on the position of the financial sector in society at large, really, and to what extent you think that the financial sector needs to up its game as a responsible social citizen, and in particular in relation to things like pay differentials and salary multiples which have gone through the roof in the last 20 years, and whether those are defensible. Thank you.
You can't remember whether you had a dim earlier.
Yeah, right.
First and second.
I'm not clear how the panel and Professor Kay think we're actually going to get to this industry-wide change of culture. I mean, are you expecting a big push from government or the regulators, or are you just expecting a gradual change from acceptable, or how?
Very good question, actually.
Addressing some leadership alignment. It's music to my ears to hear what you're all saying about values. And I think particularly want to pick up on what you were saying, Andrew, about going from owning the responsibility of being part of what went wrong to choosing which to right. And also, Paul, in terms of what you're saying about when you're owning the responsibility of really taking the whole values piece and ensuring that it's instilled and alive and active in your organisation. But it wasn't always that way in the companies which you can remember the values. So I'm interested at what point in your careers or in the company you're in now you decided, okay, here's the values, that's the key. What else?
Good question. So we've got greed. When did it all go wrong? The financial sector as a social citizen, oxymoron or not, discuss. And issues of when you've made your own had your own personal epiphany around leadership and values. Let's go with Paul, Damien and Andrew have the last word.
Greed, how do we dispel the perception of greed? I think it's going to take a very long time. I don't think there's anything we can do short term. There is a perception out there. It's a perception which is based and founded in fact, with masses of evidence, and no matter what we say, over the next few years it will make no difference. So the only thing that's going to make any difference is real actions, real behaviours. And I honestly, coming back to the next question, can we wait for government to do that? Of course we can't wait for government to do that. You know, government's regulations, rules will not dispel the view of greed, corruption in the city. We will not do that. It's only our own behaviours. And actually, there's a number. You know, if you count the biggest financial institutions in the city, yes, it's one of the world's, if not the world's largest financial centre. There's not that many, actually. There's lots of small ones, but the big ones, there's not that many. So, you know, if people running these businesses can really look at themselves in the mirror and make that change, then that, over time that will change. But I don't think it's anything about it's not a good PR program. That's not what we're doing. So where did it go wrong? Good question. It clearly, I think it went wrong with the culture. I'll say performance culture, and we all grew up in the performance culture. And I think a lot of performance culture didn't talk about what was the type of business we're trying to create for customers. So I think the seeds of doom were planted many, many years ago. How do we get change in culture? Is it going to be gradual? Is it going to be government? I think the truth is you can get change. You can get change in culture in your own area a lot quicker. You know, so it's going to take a number of us to try and change the cultures in our own businesses, as opposed to necessarily a government body trying to change the culture in a whole industry. And I think it happens at the micro level, and a number of people banding together at the micro level can make a big difference. And finally, at what point did I decide that values count? Well, was it Churchill that said, with respect to a different area that I think he's talking about our cousins across the water, that they can always be counted on to do the right thing once they've exhausted every other possibility. I think, quite frankly, most of us would say say we always knew values matter. You know, we always knew values matter. But if it doesn't appear that it's coming down from the top of the organisation, that it really does. So in other words, you've got a mouse man, but that's about it. Then, you know, do they really matter? They may matter to you personally. You may try to do the best personally, but basically you're working in an organisation that maybe doesn't feel that way. So I think my point was that I feel, you know, last few years I'm in a position to actually do something about it. I am now that guy, you know, who's printing the mouse notes. So, you know, it's shame on me, or shame on all of us, if given what we've all been through as well, we can't really make a difference. Because I think we are all going to be judged now for the next few years, given what we've been through. We're not going to be judged on our quarterly earnings. You know, that's not the legacy anyone will ever do. So, very good.
And I think greed, the perception of greed, and the actuality of greed is a very, very big problem. I mean, if one thinks about how these bonus arrangements come into being, it goes back to the profit-sharing partnerships that I mentioned earlier on, and they just subsisted after the Big Bang, and incorporation allowed them to creep into what's now become known as universal banks. But for many years, we had the Glass-Steagall Act of 1933, which segregated investment banking from retail banking because of the perceived abuses that were happening in the hubris years of the early 1920s, resulting ultimately in the 29 crash and onwards. So we had, in fact, dare I say, been there before. But there's another perception issue here, which is greed. We're motivating people, allegedly through greed, to make sure that they do the right thing. The working presumption is that they're slothful and that they won't actually do the right thing. They won't have pride in their work, and that they actually see the visible money rewards coming down the pipe. And this sad state of affairs creates, well, envy and anger in equal measure among society as a whole. So once you add up those five, you've got 5 of the 7 deadly sins operating within incentive scheme and financial services straight away. And you could argue that these bonuses are also funding gluttony and lust.
Secrets of incentive expert revealed. David, yeah.
Okay. Well, I think in terms of the thing that we have to accept is that people get paid too much in the city and they don't have a lot of money. Thankfully, because of some things that are going on now, banks don't make so much money. Returns on equity won't be as high, and people will start saying £500,000 a year for a guy managing a bunch of traders is a nonsense. And start applying capital to how much that guy is actually playing with, and say, actually, I can afford to pay maybe £50,000 a year, and he might leave. And we have to accept that he will leave. And one of the big problems that might come out of this, and it's probably slightly not politically correct, is that we are striving at the moment to make London the centre of the world for financial services. And at the moment, the principles of a lot of financial services is about greed is good, and fear is something we use as a weapon or a tool to get people to do things they shouldn't. I'm not altogether sure we would like to be at the top of that pole. I'm not sure we want to be the leaders in a field which is inherently conflicted and probably doing a lot of harm. Now that is certainly not politically correct in an environment where we have all sorts of the great and good saying this is a great export, and this is a great industry, and we should be doing it. It doesn't mean that we'll go down the climb and be the smallest, but it might mean that we start evolving as the place where people do business for the right reasons, not simply because they've got the sharpest traders or people who will not actually follow the right ethical mode. I mean, we had the other day, we were a very fascinating presentation where we talked about the idea of an oath of allegiance effectively to the client, to the consumer, and that everyone should be doing the right thing. And everyone in the room pretty much said, yeah, that sounds like a good idea, except one chap stood up and said, well, obviously it's a bit of a problem because I represent a trade body for traders. And we obviously operate in a different environment where we are trader to trader, institutionally, and what he was saying is, therefore, integrity doesn't really matter. And no one in the room, I did felt the outrage of that statement. look, you know, we are advocating a business because it obviously doesn't need integrity, because we make lots of money out of it. But not directly, somebody else is making the money and we get the benefits from it. So I think we have to get really real about what we're talking about here if we are going for a change. I agree with Paul entirely. It'll change by individuals in companies making their businesses different. Those individuals might get attacked by everyone else in the industry, and they may throw lots and lots of slings and arrows at them by saying, oh, they're not doing the right thing because they themselves are embarrassed by their own companies. But we have started that, and we had a dinner recently where we have got a bunch of people who are quite senior in financial services, and there was a group of like minds there who wanted change. I think the other thing we do is we use, I hate social media, but it's quite useful sometimes, we can get other people to start talking about what's wrong. And people power certainly worked reasonably well in the Middle East over the last few months to actually start people saying, we can't go on with this. And then finally, I think we use the same methods that people used in the past to stop people doing drink driving. It wasn't the legislation, it wasn't the police stopping people, it was that it was socially unacceptable to do it. And we embarrassed people into doing things differently. So you can try the law, sort of, I will do this because it's right, you can try the everybody thinks it's bad, these people are doing these things, and then you can say, and we will pillory the people who are doing it in the way that they should be doing it. But we have to accept that in terms of competitiveness as a city, we are likely to be less competitive, but have a decent industry.